This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. So I want to start this podcast off with two speeches. Not my speeches. One, a very famous film speech that you have probably heard. And second, a film speech that you might likely have not heard, but for those that have some Wall Street experience, they will have most likely heard it. First, let me play you the very famous speech from the movie Wall Street.
Well, I appreciate the opportunity you're giving me, Mr. Cromwell, as the single largest shareholder in Teldar Paper, to speak. Well, ladies and gentlemen, we're not here to indulge in fantasy, but in political and economic reality. America has become a second-rate power. Its trade deficit and its fiscal deficit are at nightmare proportions. Now, in the days of the free market, when our country was a top industrial power, there was accountability to the stockholder. The Carnegies, the Mellons, the men that built this great industrial empire made sure of it because it was their money at stake. Today, management has no stake in the company. Altogether, these men sitting up here own less than 3% of the company. And where does Mr. Cromwell put his $1 million salary? Not in Teldar stock. He owns less than 1%. You own the company. That's right. You, the stockholder, and you are all being royally screwed over by these bureaucrats with their steak lunches, their hunting and fishing trips, their corporate jets and golden parachutes.
This is an outrage. You're out of line, Gecko.
Teldar Paper, Mr. Cromwell, Teldar Paper has 33 different vice presidents, each earning over $200,000 a year. Now, I have spent the last 2 months analyzing what all these guys do, and I still can't figure it out. One thing I do know is that our paper company lost $110 million last year, and I'll bet that half of that was spent in all the paperwork going back and forth between all these vice presidents. The new law of evolution in corporate America seems to be survival of the unfittest. Well, in my book, you either do it right or you get eliminated. In the last 7 deals that I've been involved with, there were 2.5 million stockholders who have made a pre-tax profit of $12 billion. Thank you. I am not a destroyer of companies. I am a liberator of them. Will not only save Teldar Paper, but that other malfunctioning corporation called the USA. Thank you very much.
I'm sure people can take that in a lot of different ways. But at its root level, it's very similar to the Francisco Diaconia speech in Ayn Rand's Atlas Shrugged. Money is a tool of exchange among men. Not all men are good. Not all men are honest. But it's the best system that we have. And I think it was just a good reminder to kind of play that speech. People haven't heard it for a long time. But it leads into something with where I'm going because, well, that's a big philosophical view. Most people really view making money on Wall Street, especially younger guys, view it like a speech that I'm about to play from Ben Affleck. This was in the movie Boiler Room. And let me let this play.
I'm sorry, man. That's my mistake. Shit, I'm so sorry. It's okay. Don't worry about it.
Fucking dumbass.
Get the fuck out of here.
What?
Don't talk to me. Don't look at me. Just pick your ass up out of that Italian leather chair and get the fuck out of this room right now. Come on, let's go, Schleprock. Out. That's it. We expect everyone here to treat their coworkers with a certain level of respect. Okay, before we get started, I have one question. Has anyone here passed the Series 7 exam?
I have a Series 7 license.
Good for you. You can get out too.
What? Why?
We don't hire brokers here. We train new ones. That's it, Skippy. Pack your shit. Let's go. Okay. Here's the deal. I'm not here to waste your time. Okay? And I certainly hope you're not here to waste mine. So I'm going to keep this short. Become an employee of this firm, you will make your first $1 million within 3 years. Okay? I'm going to repeat that. You will make $1 million within 3 years of your first day of employment at JT Marlin. There is no question as to whether or not you'll become a millionaire working here. The only question is how many times over. You think I'm joking? I am not joking. I am a millionaire. It's a weird thing to hear, right? I tell you, it's a weird thing to say. I am a fucking millionaire. I guess how old I am. 27. You know what that makes me here? A fucking senior citizen. This firm is entirely comprised of people your age, not mine. Lucky for me, I happen to be very fucking good at my job, or I'd be out of one. You guys are the new blood. You're gonna go home with the Kesef. You are the future big swinging dicks of this firm. Now, y'all look money hungry, and that's good. Anybody tells you money's the root of all evil doesn't fucking have any. They say money can't buy happiness. Look at the fucking smile on my face. Ear to ear, baby. You want details? Fine. I drive a Ferrari, 355 Cabriolet. What's up? I have a ridiculous house in the South Fork. I have every toy you can possibly imagine. And best of all, kids, I am liquid. So, now you know what's possible. Let me tell you what's required. You are required to work your fucking ass off at this firm. We want winners here, not pikers. A piker walks at the bell. Piker asks how much vacation time you get in the first year. Vacation time? People come and work at this firm for one reason, to become filthy rich. That's it. We're not here to make friends. We're not saving the fucking manatees here, guys. You want vacation time? Go teach third grade public school. Okay. First 3 months at the firm are as a trainee. You make $150 a week. After you're done training, you take the Series 7. You pass that, you become a junior broker, and you're opening accounts for your team leader. You open 40 accounts, you start working for yourself. Sky's the limit. A word or two about being a trainee, your friends, your parents, the other brokers, whoever, they're going to give you shit about it. It's true. $150 a week, not a lot of money, but pay them no mind. You need to learn this business, and this is the time to do it. Once you pass the test, none of that's going to matter. Your friends are shit. They tell them you made 25 grand last month, they're not going to fucking believe you. Fuck them. Fuck them. Parents don't like the life you lead? Fuck you, mom and dad. See how it feels when you're making their fucking Lexus payments. Now go home and think about it. Think about whether or not this is really for you. If you decide it isn't, listen, it's nothing to be embarrassed about. It's not for everyone. Thanks. But if you really want this, you call me on Monday, and we'll talk. Just don't waste my fucking time. Okay, that's it.
You know, that is the way that most young men begin their understanding of Wall Street. It's through the brokerage lens. It's working for a brokerage firm. It was how I first understood it, through the lens of Liar's Poker, understanding Solomon Brothers. The idea that if you worked for this big bank, this big investment bank, and you could be a broker, you could make a fortune, and you could actually call yourself a trader. But being a broker is not being a trader. It's just not. Now, before I contrast the Ben Affleck speech into some trend following, I do want to make one comment about one positive thing, two positive things Affleck says in that speech. regardless of his tone and whatnot. Obviously, I made the point earlier about the money. Might not be the best system, but it's the only system we have. Number two, the idea of putting your time in. I'm not talking about putting your time in to become a broker. No. I'm talking about putting your time in to learn trend following trading, to be comfortable with the idea that you might not make $1 million in the first month. In fact, you won't. And so can you allow yourself to be in learning mode? Can you put off all the distractions and focus on the education of learning a trend following system, learning trend following psychology? Can you do that? Or do you still operate under society's rules that if you're going to lift a finger to learn anything, somebody has to pay you? That's where I agree with Ben Affleck in that speech. Don't work like that. If you have the opportunity to learn a strategy, if you have the opportunity to learn trend following trading, and you really want to do it, don't worry about the silly stuff. How much time it might take, how much money it might take. As long as you don't go broke, you'll be fine. So as I play that great intro speech from Wall Street, the film, the first film, as I play the Boiler Room speech with Ben Affleck, which has got a lot of bad in it and a lot of good in it, I want to transition to 4 clips from trend following trader Bill Dunn, who's covered in my first book. Here's clip 1.
So our investment style is that we are medium to long-term trend followers, and our approach is quantitative. That is, we have computer models that have been developed from historic studies, statistical studies of the behavior of the various futures that we trade over as long a history as they have. And that means for new futures, typically that's 4 or 5 years as a minimum, and for ones that are longer established, that sometimes is 15 to 25 years that we've analyzed. We exercise no discretion whatsoever in executing the orders that are generated by our computer models, and we simply do not override these models or these signals. And the markets we trade are global exchange-traded futures that have large trading volumes, so that we are able, with our clients' funds, to move in and out of these markets without upsetting them or giving them the impression that we are the leader instead of the follower. We have serious risk management programs in place and always have, and our target to design a program is for each program to have a 1% probability of having to experience a loss of 20% or more in a 1-month period. Now, that risk level can be changed by the client to either a higher risk or a lower risk.
Now here's clip 2.
We've shown a few examples of events that you may have recalled seeing. This is the October 87 stock market crash, where the S&P lost about 22 and we lost about 2. Here is the August 88 Asian crisis, where the S&P lost around 16 and we gained about 22. And the point here is that there is no correlation.
Now here's clip 3.
It uses exactly the same methodology that was developed almost 30 years ago. It uses the same models. It uses the same manner in which it analyzes markets to determine where the buy and sell signals are and how much to buy and sell. And the only thing that's ever changed about this whole model is the vehicles that are being able to be used in the portfolio, because new futures have come online that have been able to be added to the portfolio, and in some cases older futures that had been used, the liquidity has dried up so much that we couldn't use them anymore. So this is our oldest model that now encompasses the financials because that's where the large volumes are.
And finally, the last clip from this presentation that Bill Dunn gave.
This is an example of how our WMA program trades a market. This has been picked because it was a particularly favorable market for our particular model. This is 18 months of the Japanese yen, and as you can see, it went up and down, and there were some significant trends, so we should have had an opportunity to make some money, and it turns out we did. Since the WMA is a reversal system, it's always in the market. It's either long or short, trying to follow and identify the major trends. So while this is the first signal that's shown on the chart, we obviously must have been short coming in here, and this rise here was enough to tell us we should quit being short and start being long. And it seemed like a pretty smart thing to do about this time after we saw that happen. Then we had a significant retracement which caused a short signal here. Now, there's something to note here is that this rise seems very small in comparison to this drop that took to get the short signal. But the reason is because our program and our model has always incorporated near-term volatility, and this volatility here is far less than the volatility that was going on here. So it took less of a change from the previous recent market to give us a change in direction here than it did here. Now, also because the volatility is very high here, this rise was, while it's much larger than this, was not enough to give us a long signal. And as a result, we rode this short position for nearly a year, all the way down to here when we got a long signal, which was wrong, and we reversed and went down to the short. Now, that was a very, very good market for our program. But some markets are not so good. And this is a not so good market. This is the same exact period of time, and the British pound was truly miserable here for us. As you can see, we were buying tops and selling bottoms, and this was a very poor way to try to increase our clients' equities. But this kind of behavior, even in something like the British pound or something that isn't working for a while, it doesn't continue forever. And also, it's just one part of our portfolio, so we have more diversification. So we are able to live through these disappointing times also.
Notice the pragmatism in Bill Dunn. Notice the down-to-earth presentation. It's not Michael Douglas. It's not Ben Affleck. It's not Hollywood. Perhaps to you, if you're not really familiar with this, it sounds boring. Perhaps. Let me go ahead and play two more clips from a trend-following trader. These are from Jerry Parker, who is featured in my second book. Here's the first clip.
We win when we take small losses, let our profits run. So the key is not to be desiring taking a lot of small profits. And so you need to have a really nice trade to make it worth your while to lighten up a little bit. But we tend to be very long-term, especially in the beginning. We put a trade on, we have stops that are way far away from the market. I used to say we take a small loss, but I think it's better to take an optimal loss. You don't want to take one that's too large, and that you don't want to have your stop so close that you're going to get bounced out. So, and then hang on to the trade. Don't get too excited. If you're not making very much money, that's fine. If you got a little loss, that's fine. If you make a decent profit, it turns into a loss, that's fine. Just hold on to it, and then really get aggressive when you've been rewarded by a big, huge profit. So we like to have a good reason to be compelled to do a trade. because most of the time we do a trade and we get bounced out, we have to get right back in the same direction. So we shouldn't be too excited about getting out too quickly.
And here's the second clip, which is a really interesting view on mean reversion trading.
I think another type of uninformed trader from my point of view is somebody that believes in mean reversion. I think these are the people that we're going up against. Mean reversion works almost all the time, and then it stops and you're kind of out of business. So the market is always reverting to the mean, except when it doesn't. And then we're on board this big, huge trend, and these people lose a lot of money. So there's just two competing philosophies. Who wants a system like we have, 40% winners, losing money almost all the time, always in a drawdown, making money on about 10% of your trades. The rest of them are sort of break even to losers, infrequent profits. I'd much prefer the mean reversion, where I have 55% winners, 1 or 2% per month. I'm always right. I'm always getting positive feedback. My clients are always loving me. Then, every 8 years, you're kind of out of business, because when it doesn't revert to the mean, your philosophy loses.
Or you just double down, right?
It'll come back.
And another point he made, which is really good, is that about money management. To some degree, you can't really separate trend following from money management, because it's just like Mike said. These people value people or mean reversion. Yeah, if you've got a nice loss in a trade, it's even better than when you put it on. So let's do more. I mean, why not? Intellectually, you've got to agree that we should even do more. Whereas with the CTA, buying strength, selling weakness, by mere definition, if a trade is a loss, it's a bad trade, and we're looking to get out. So we're fearful of losses when the rest of the world tends to be hopeful. And then when we have a big, huge trend and lots of profit, we're very hopeful that the market's going to keep going, and the rest of the world is very fearful that they're going to give it back. So these people, it's two different competing philosophies, and I would say that mean reversion is somewhat uninformed.
I hope to get Jerry on the podcast soon. He's really got some great insights, and he has been at trend following for a long time. Let me go ahead and jump to another trend following trader. And I believe I played this clip before, but I want to add it in because it really it gives you an idea of trend following and its longevity. This is from David Harding of Winton Capital. Let me let this play.
Today in the studio we have with us David Harding, the founder, managing director, and head of research at Winton Capital Management. Thank you very much, David, for coming in today. What drew you to non-discretionary funds over discretionary funds?
I think the distinction's a slightly arbitrary one. I mean, the CTA industry, the futures industry, is dominated by people with systems, systemic trading. The fact is, when we did our research 20 years ago into various types of systems, we found that they worked, or at least back then we found that they had worked. It is not enough to say that because something has worked that it will go on working, but it is a matter of record that it has gone on working for the last 22 years, which has been time enough for me to set up AHL first, which is, provides the bulk of the Man Group's profits, which is now one of the biggest companies in England. And then even, the systems have worked well enough for me to leave that and start again from scratch and build another large company. So systems have worked amazingly well over the period, partly because the efficient market theory, which has been in such widespread belief, has been widely believed, partly because that says that they shouldn't.
Just a great, honest assessment of trend following and its longevity from Harding. Matter of fact, his fund is $25 billion under management. He's made billions. Didn't start with all that, but he's done it. And there he is, just very pragmatically saying, this is what it is. This is what it is. You can doubt me. You can say it's not true. He's just like, this is what it is. I just think that stuff's great. I mean, I love all of those clips. The 2 movie clips, Bill Dunn, Jerry Parker, and David Harding. They're all fantastic. As I roll out, though, I want to read a quick line from Harding, because because I think this sums up trend following in a nutshell. And he says, we know that we know almost nothing, but the almost nothing we know isn't completely nothing, and we only bet on that, end quote. Isn't that great? I just think that's fantastic. It is such a fantastic line. We know that we know almost nothing, but the almost nothing we know isn't completely nothing, and we only bet on that. And the only thing they really know is the price action. They know the price action. They know whether a market is moving up or down. They can follow the flow. Ultimately, that's the trick. Following the flow. And if you can follow the flow of a market, either up or down, you've got a chance. Here's a great alternative way to think about flow. Coming from a martial arts superstar who's no longer with us, Mr. Bruce Lee. Got to go watch the video on YouTube if you haven't seen it. I put it on my blog over the years, but it just gets you in the gut. It's a very Eastern way of thinking, a very Zen way of thinking. Not trying to predict the future, not trying to predict tomorrow. That stuff is all impossible. No way, no how. So why do all this? Why look at Wall Street, the movie? Why look at Boiler Room, the movie? Why listen to these great trend-following traders, Bill Dunn, Jerry Parker, David Harding? Why think about the almost nothing line from David Harding? Why listen to Bruce Lee talk about flow? Well, this way of thinking does one thing exceptionally well. It puts you in a position to avoid being punched in the gut. It puts you in a position where you can try not to be kicked in the balls. What do I mean? You don't want to wake up one day after trusting the Fed or trusting the government or some politician that they would take care of you. You have to take care of yourself. You have to put yourself in a position to benefit and protect your assets when the next big move happens, when the next black swan happens, when the next unforeseen, unpredictable, chaotic moment travels in and smacks you in the solar plexus. Are you going to be ready? And if you're not ready, you're flirting with disaster. You are most definitely flirting with disaster. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.